following is a presentation of TFNN. It is now time for the Tiger Technician Hour with your host, Basil Chapman. Call now, toll free at 1-877-927-6648. Internationally at 727-445-1044. Now, Basil Chapman.
Good morning, everyone, on this Tuesday, 15th of September. My pleasure to be here Monday through Friday, market days. And thank you to Larry and Tom. Great shows going early this morning. And hopefully we'll have that all the way through the day. What is today? Today is Tuesday. So therefore, you've got, straight off me, the Options Hour. You've got Steve Rhodes. You've got Dave White. You've got Tom O'Brien back again. Then you've got Andy Hecht. You're just programming right through the day and great information. Well, let's look at this chart right here. What have I got? I got the E-minis. For my subscribers to my opening call every day, I show these charts. I show the daily and the 120-minute charts. Sometimes show the weekly because it was so important at a certain point to show where we've been, what kind of top we've made, how we've bounced off the bottom, etc. Look at this chart here. I wanted to show you something just in terms of perspective. If you're looking at this, I'm circling it right here, this 120-minute chart. You see this? You remember I always say the market is made up of straight lines, up or down, or cup or arch formations. The cup and arch formation can have a variation because it could be a V-shaped cup or it could be an inverted V, but it's the same principle. So just three patterns that you're looking at. Well, here's the arch. And what I had said is we've held support. If the 1949s is taken out in the E-mini, December E-mini, then all of a sudden you've got this attraction of the 200-period exponential moving average of 56. Now it's moved up, 1957. And it was 56 we were looking at earlier. And all of a sudden, it means that you've got broken a symmetric wedge. See this wedge in the daily? It hasn't broken yet, but in the 120-minute chart, it has broken. And what happens is it allows, because the stochastic I said was at the lower end of its range, but the MACD suggested that although there could be upside action, it might be fairly limited. Fairly limited doesn't mean up 14 points as it is now. Fairly limited means that the rally could extend for another couple of hours, a day or so, but then it should pull back as long as this MACD is holding flat. In other words, with a narrow beta, a narrow range between the fast-moving average and the slow-moving average. All right? Now, what's very important is I want you to keep looking at this. Just keep looking at this particular chart right here. Remember, this is the one on the right. That's the 120-minute chart. Keep looking at it. See how it's getting narrower? Look at that. Oh, isn't that narrow? Wait a minute. All of a sudden, it's got a range that goes from the 18-ish area and the low to about the 1985, 86 area. And when you're looking at it in that context, it looks like I could put a rectangle right here and say, wait a minute, we're just in a rectangle formation. It looked quite wide. Didn't it look wide earlier on? But wait a minute, this is nothing. Look at this. What if I did this? Oh, look at that pattern. Look at that pattern. Well, now you can see why I've been talking about in the daily chart that I show subscribers, how even though there's a zzz, a snore that feels lazy, but the rising technicals can also suddenly become a trigger for a sudden pop-up. It also gives support to 16,330, it's very important. And that'll be tested if there is any further weakness. Well, so far there hasn't been weakness. And you got that sudden spike to the upside, but you need 16,665 in the Dow to make a leg see to the upside. But look at the steadiness. And I was impressed with this. That's why for the short positions, we tightened up those stops because I don't really want to be hanging around if there's a move in price. There wasn't. Look, when we went to this low on Friday at 16,330, there wasn't really much to the upside. It was hugging the 9-period moving average. I didn't want for the M-shaped formation, if it was not going to break to the downside decisively under 16,600, I didn't want to be hanging around here too long in the short positions, unless I got those short positions at really good prices and I was prepared to give up some of the profits. Well, in this particular instance, you've got to go from 16,524 in the Dow, the high is 16,538 so far today, and you've got to climb 130 points or more to get to a leg C. Is it possible? Absolutely it's possible, but we're still talking this trading range. You see this lowercase h that went to a lowercase m? Well, if you're looking at the chart that I just showed you of the 120-minute chart, it defines very well that we've been in a very tight range. We're actually still in that tight range, and you can see this little uptrend, I call it the uptrack, Chapman Wave, inside track resistance. You can see that that goes to about 19, let's see if it's today. Let's see if we can continue into there. So it goes to about 1967, and then there's a lot of resistance between 67 and 71. And the high that we're looking for is 1982.75 that was made at 4 o'clock on the 9th. And that still keeps you in the range. The range changes the moment that the E-minis start to go to 1992, 96, somewhere in there. Okay. But in fact, in the context of what we've been looking at since the smash on August the 24th, we've had a fabulous rally back up, and then we've been stuck in a trading range. That's what I really wanted to show. Dow's up 152. S&P's at 16,650, 16,002. No, why can't I say that? 16,528. The S&P's at 1969, up 16. The comp index is up 40 at 48.46. Gold is down 4 at 11.0370. Silver's down 4 cents at 14.31. Platinum is up 7 at 961. High-grade copper is at 2.42. Let me just always like to look at this high-grade copper. I think it's very important. Move that away. Get to the HG. This is a continuous contract. HG. Look, there it is. Went to a peak D. It's pulling back from peak D. Single leg A up in the weekly. Parameters to watch, 245. It's at 242. Up 0.017. It needs to get to the 245s within a couple of days, because if it takes out 2.37 on the downside, that's going to be a negative, and suggested that weekly is just a single leg A up. So, excuse me. The copper continuous contract monthly chart says, hey, this is the inside track support. It's really important this month not to crack on the downside. 2.287. That was the low. If it takes that out, it's not going to be a good sign. Let's go to crude oil. Crude oil at this particular point at 44.58 is just under the 9-period exponential moving average, just kind of biding its time here after the big move up. Spoke about it yesterday. Meantime, it's just kind of stuck. Let's call it stuck. Now, what's really important is if we're looking at the dollar, DXY, you see the dollar's got a little bit of a rally here, but it's a high-level consolidation after that big move from the 92.62 low on the 24th of August to the 9th, to the September 3rd, high of 96.62, merely a consolidation. See the 120-minute chart, haven't done anything there. Yeah, it's the upside down pattern we're looking at in some of the indices, and in this particular case, trying to form a low-level consolidation. If you talk about a high-level consolidation, this is the opposite. It's a low-level consolidation, the 120-minute chart, but the daily says, what are you talking about? You have to go all the way down to 94, around about 94.90 to start to break the 50% correction from the recent high. So far it's acting okay. That's why gold is not breaking down, but it's just there, down 4 or 5 points. We'll watch this over the period of the next few days. Thursday is going to be really important, and I'll explain why. The TLT is pulling back here. It's down $1.18 to 120.14. I have this arch formation that comes in when? Let me just move this across. So that comes in, today. Left side, right side price, but that's to there. If I had to take it in a very traditional way instead of a little bit more contemporary, then we would be looking at Okay, look at that. And that takes you to the 25th of September. And it says by the 25th of September, the support that has to hold is 117.66. Most importantly, the level to break above, and I said this morning in my opening call, my Traders Corner has the TLT. We always have that, whether or not we got to trade. It's just we have it because the parameters are so important. I said if the TLT this week gets to 123s, that's going to be really important. All right. So for those of you who are trading, what I had done earlier was I had said that there was a peak F in the December Dow futures E-mini contract, and that we were going to go either down or sideways where we shouldn't go higher. And I gave a down arrow back at 1961.25 on the E-mini 2-minute chart. That's a 2 minute on the left, 2 minute on the right. That's the Dow futures on the left, E-minis on the right, S&P E-mini on the right. And that's suggesting that if the E-minis break 1950, they're 1957 right now, 1958. If they can take out the 1956 area of support, that will suggest that at least for this particular phase of the rally, today's rally, that is, there should be a pullback taking us into the lunch hour period. So we're watching this closely. Meantime, back at the ranch, what I haven't done and what I want you to spend a little time on here, let me move this there. Let me move this back again, right there. And now let me show you. VIX, the volatility index, is down $1.46 at 22.79. The fact that after all this time, since the 53.29 high of August the 24th, the very sharp pullback, and the fact that we've gone basically sideways in both the market and in the VIX index says to me that holding above 20 implies, especially above 21, implies that fund managers are still nervous enough to want to have insurance. Now, at this particular point, I really have to consider that it's only insurance, and let me explain why. In the volatility index, in my reading of it, we've got a measure of intensity of buying the VIX and selling the market itself, the different indices. The history of this particular type of candle is not that there's a big red candle. It's usually a spike, a single wick that goes to the upside. Not always, but usually. And that single wick pulls back really sharply under the 200-period exponential moving average. It's been doing that for a year or two. But all of a sudden, even with today's sharp move up, 145 points in the Dow, 15 in the S&P, that's big. I'll talk about that when we get back, and I'll talk about the implications just with numbers. We can do other calculations, but let's use numbers. I'll be right back. Basil Chapman, Tiger Technicians.
Today, it's hard to tell if the economy is coming or going. Regardless, I want my money going in the direction I choose. If that's your stance as well, then you want to know how Everbank can help keep your money thriving just the way you want. Is growing your money a priority? Everbank is committed to a yield pledge promise to pay high yields on your checking, money market, and CD balances. Looking to diversify? Everbank ingeniously developed accessible ways to spread your money around the world into foreign currencies and even non-FDIC insured metals. And when it comes to your wealth, they bring a highly experienced and global perspective to help you manage it. Everbank's financial philosophy flies in the face of the status quo. They believe your money's performance should not be determined by today's economic circumstances, but by the drive to rise above them and create opportunities that favor your objectives. If that excites you like it does me, visit everbank.com/TFNN to find out what they can do for you. Again, that's everbank.com/TFNN. Visit them today. Everbank is a member FDIC and equal housing lender.
Since 1984, Basil Chapman has been using the Chapman Wave methodology to advise traders of his expert market opinion. While originally hand-drawing charts from the late 1970s into the 1980s, Basil noticed that prices under most circumstances virtually always had a certain number of legs to the upside before declining sharply. Later, Basil found that computer software, which included the standard market technical indicators, enhanced the degree of accuracy in calling price turns as well as market trend calls. resistance. Thus was born the Chapman Wave sequence. Using the Chapman Wave methodology along with other indicators, Basil Chapman advises his subscribers of his expert market opinion each market day with his opening call newsletter. Right now, you can get a 2-week free trial to the opening call, Basil's daily trading newsletter, by visiting the front page of TFNN.com. Cancel at any time during that trial and pay absolutely nothing. Get your 2-week free trial to Basil's newsletter, The Opening Call, today by visiting TFNN.com.
Many of our new listeners have heard about the Tiger's Den, but wondered, what exactly is it? The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of your favorite TFNN shows, plus see all the charts as they happen live during those shows, and have access to all those charts. You can test drive the Tiger's Den absolutely free for 30 days. It will greatly enrich your knowledge of these markets. Details on the Tiger's Den are on the front page of TFNN.com.
The Path of Least Resistance is David White's daily trading newsletter, and if you're looking for active trading ideas, then now's a perfect time for a 30-day free trial to this powerful daily trading advisory service. David uses his years of trading experience to offer his subscribers his trading ideas each morning in his Path of Least Resistance newsletter. Using a combination of equity trades along with options, David keeps his subscribers up to date with all pertinent market information with intraday afternoon updates when warranted. Don't miss out on this great chance to get a 30-day free trial to David's daily newsletter, The Path of Least Resistance, with no obligation to pay anything. David has been delivering solid recommendations for his subscribers recently, and if you'd like to see the type of newsletter he delivers every morning, then visit the front page of TFNN and you'll find The Path of Least Resistance under Trading Newsletters. For all the details and to start your 30-day free trial today, log on to TFNN.com now.
Tiger TV is an exciting way to experience TFNN programming. See high-definition video giving you crystal clear charts, as well as seeing some of the faces of TFNN's highly acclaimed financial experts with crisp, full-fidelity sound. Catch Tom O'Brien, John Logan, Steve Rhodes, Basil Chapman, Larry Pesavento, Think or Swim, David White, Andy Hecht, and Daryl Martin in crystal clear, high-definition audio and video. Tiger TV, exclusively at TFNN.com. Basil takes your phone calls now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
Hi everyone, Basil Chapman. We are back, and let's look at this volatility index. It's very difficult for the market to keep up that kind of selling intensity when there's really not a consistent flurry and then acceleration of bad news. If it's these sudden things, I went through it the other day, that August 24th 500-point down opening, I kind of could understand that. That extra 500 was just mechanical or electronic, let's put it that way. So I'm prepared to eliminate a chunk of that. I'm prepared to say that this candle here is an aberration. 53.29 is way, way higher than it ever should have been. I'm suspecting that under normal conditions, with the kind of news that was out there, which really, what was the news? I mean, China, you know, it's important, of course, but it wasn't the kind of news that normally would create the kind of headaches that we associate with a sustained move to the top in the VIX, or even these sudden sharp spikes. And it just came out of it. In fact, most people, if you had asked them, they wouldn't even know what the heck, why the market will down. They understand every time we hear Greece, the problems, because you see the videos of Greece and the comments, it goes on and on and on. Wow, I wish I could take the time, I'll see how I can figure it out, to talk about news in relation to its importance, historic importance, and the bias of the editor, because everything starts from the top, from the editor. So I don't know if it's really important because it's part of the VIX. It's part of the climactic moments that make for market reversals. The market slump and then a reversal to the upside. Okay, it doesn't matter. Right now, I'm talking about the China plunge, and we call it that, at 53.29, which I think maximum should have been, we were in the 20s, maybe 28, maybe 32. So that 20-point extra is just crazy. So I'm anticipating that we've got a very nice base in the shorter term, and that there's more like an upside bias. It doesn't have to be a big bias, but there's more like an upside bias at this particular point. As each of these arches, the H, lowercase h, that goes to a lowercase m, and then I call it a continuous M formation. In other words, it just makes another one. And the next one could even be a little bit bigger. And maybe we go to a C and a D in the Dow. But if you're thinking about what would make the Fed go more than just a fraction, a quarter point, it really would take an incredible amount for them to do that. They're just going to be steady as a rock. They don't want to start the rising interest rates, because they'll only do it if they feel that it's going to be something that they continue to do, or they can do it once and they maybe hold off doing anything after that for quite a while until the next pieces of evidence come into play. But if that's the case, I'm suspecting that they'd rather give a stronger warning that there will be an interest rate rise if such and such happens than to actually do it. And if that's the case, there's a chance that this VIX index will start to pull back into the 19s. And if it goes to the 19s, the speed with which it goes down to the 17s is going to dictate how, now I'm going to reverse the charts, INDU, how quickly this bounce back can unfold. And the bounce back is, you've got a little bit of an ape that started last week, because the high of the 4th, the week of the 4th at 16,632 went to 16,664. So that little bit of an edge there says it starts gray leg A, number one. And number two is, if this week you can go above to 16,664.66, that continues leg A. If that can only happen next week, that'll be B. But I've already drawn in the arch formation right there, and that arch formation says you can go to 16,840s. That's the 9-period moving average. If you get to that level, you're probably going to surpass it by a little bit. But in the meantime, back at the ranch, look at the stochastic. It's at 32%. It's arching. It's having a tough time actually rallying. It is rallying, but it's not looking very pretty. And the MACD is just beginning to flatten out now. And that usually takes a few weeks before it can really adjust, let alone even cross this huge gap between minus 172 in the MACD's histogram. And that to get to a plus is going to take a lot of work and a lot of points. So let's go back to our story here. Within the context, as we go to a break, of the VIX index, I've discussed that the VIX had an aberration to the upside. Now it's just trying to kind of get to a mean level, and we'll see if the mean is above 20 or the mean takes us down to the high teens. That's going to be important. I'll look at the IWM as soon as we get back.
Platinum, grains, crude oil, gold, copper, cattle, hogs, gasoline, natural gas, coffee, cotton, cocoa, and sugar. These are just some of the commodities mentioned in the most recent issue of Andy Hecht's Techno-Mental Commodity Report. Andy publishes his weekly newsletter every Thursday morning, where he breaks down the commodity market and provides his subscribers with specific trading recommendations based on his trading methodology. By signing up for a free trial to the Techno-Mental Commodity Report, you'll get a full 30 days to try out this powerful newsletter service and see for yourself the types of trades Andy has recommended for his subscribers. When you sign up for a 30-day free trial, you're under no obligation to pay anything. And should you decide to continue, you will lock in the low rate of only $79 a month. Sign up right now for the Techno-Mental Commodity Report and make sure you're ready to catch the next big trade in commodities. For more information and to get started today, visit the front page of TFNN.com.
TFNN is excited to offer a brand new piece of market scanning software unlike anything the industry has ever seen. John Logan and his team have spent years developing their market profile tools to finally be able to release the TAS Profile Scanner Plus. And right now, you can get a 2-week trial absolutely free just by visiting TFNN.com and providing us your name and email address. The TAS Profile Scanner Scanner Plus is the premier market profile-based scanner in the industry. Powered by the acclaimed TAS proprietary algorithms, this feature-rich scanner is a standalone desktop software that instantly filters over 2,500 global financial markets such as stocks, ETFs, commodity futures, and Forex. Within 3 minutes of signing up, you can have the software downloaded and running on your computer with a complete roadmap of market indicators and inflection points to trade off using the TAS Profile Scanner Plus. Sign up today and try this amazing piece of software by visiting TFNN.com. Larry Pesavento has just started his brand new service, Fibonacci 24/7, and he's already delivering content to his subscribers on a daily basis when the market's opened and even on weekends. Each Monday, you'll receive Larry's written report that provides detailed commentary and a summary on the charts and videos that Larry sends out. And throughout the week, when warranted, Larry will send out via charts or videos or both the key markets that he is watching during the day. This will be up-to-the-date, active trading information that will help you in your daily trading. In Larry's first week alone, he sent out 25 charts, 6 videos, and a full report to his subscribers in just 1 week. If you're a technical trader that uses patterns and retracements to trade, then Larry's service Fibonacci 24/7 is something that you must try. Right now, new subscribers can get a full 30-day money-back guarantee. With nothing to risk, sign up now to Larry Pesavento's Fibonacci 24/7 by visiting the front page of TFNN.com under Trading Newsletters.
If you're an active trader looking for that extra edge when it comes to trading and investments, then now is a great time to get a 2-week free trial to Tom O'Brien's daily market letter, Market Insights. Tom O'Brien's daily newsletter, Market Insights, comes out every market day at around 9:30 a.m. and provides Tom's daily commentary on the broad market, including the Dow, NASDAQ, and S&P, plus specific trade recommendations. There's even an update published most afternoons to keep you informed about the day's market activity. He'll give you the entry price, price target, and stop price of each stock and option trade. With Market Insights, there's nothing left to guessing. For all the details and to get your 2-week free trial to Market Insights started today, visit TFNN.com.
This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
Hi, folks. We're back. Basil Chapman. Dow's up 139. S&P's up 14. Let's just have a look at that 2-minute Dow and 2-minute E-mini chart. There's the one. About to tackle. Yep, it's just starting to break its support. That's the Dow. And the E-mini has broken its support. Very interesting. And we'll see what happens here. But there's a good chance that it pulls back a little bit more and then tries to stabilize again. All right, let's go back to what we were looking at. The IWM trading at 115.34, up 69. And really what's kind of, I would say, the important factors that I'm looking for now are repeated patterns. It's that rectangle in the 120-minute chart. That's there. Let's move it down. What's important here is that the arch formation in the daily chart is still unfolding, hasn't been broken yet, and that'll be broken if leg C starts by Wednesday or Thursday, taking out decisively 116.42, the high of September the 9th. And if that's the case, what will happen is that the MACD will be stronger, the stochastic will get to the 80% level, start to hold, and that'll suggest you've got even more time on the upside rather than the downside. Doesn't say how far you're going to go to the upside, just says, hey, if you're short at this particular point, tighten your stops because you can always get back in. You don't want to be sitting short as the market starts to accelerate because of something the Fed said. And then all of a sudden you're looking at a move from 115 to 116 the IWM that turns the 200-period exponential moving average at 120 or even 117 is the 9-period moving average in the weekly as an attractor, as a magnet. So you just got to be a little careful. Yeah, we had that smash to the downside. We're using up that downside energy now for a bounce. I'm still calling it a bounce. There's nothing here that changes it from a bounce to a real rally. A rally meaning you've got at least a leg D to the upside in the daily. And look, the Dow's only gone to a B. It still needs to go to a C above 16,664. So we're going to be watching that one closely. All right. Now, so the IWM, what I really wanted to talk about was the weekly chart. Let me just open this up so you can see the picture. IWM is the Russell iShares Russell 2000 ETF. August the 24th, it didn't even come close to the 103.54 low of October of last year. In fact, it came down, instead of 103.54, it came down to 108.26. And then 108.26, let me just type that in, 0.26 on 8/24/7, I think it was, the week. All right. So now what we're looking at here is that the stochastic is kind of flattening out at 27%, hasn't even gone to the 30s yet. The second one is that the MACD is trying to form some kind of a base here, but nothing strong yet. The best case scenario I can see is that everything works out, that the Fed does whatever they do, and the response in the market is a big rally, and the big rally says, okay, you can go to the, if you break 117s, the 117.42 is the 9-week moving average resistance in the IWM's weekly chart. If you take that out, you can go to the 120-ish level. And then you're going to arch around and come back for retests of recent lows. And that'll go right back to where we are, 117 to 115. And if you take that out, you started the H pattern that says, okay, now we're on our way down to test the 108 area. And we'll go one step at a time. We haven't even got the reversal confirmed yet. So let's just look at the positives first. Monthly chart says, hey, wait the entire month because you've traded already below halfway into the wick of the candle, below 113. And that says the bounce here is going to be important. Why? Because there again, we've got resistance, and the resistance is at 119 in the 9-period moving average of the monthly chart. So I'm trying to put this together by saying, there are enough signs that indicate, yes, there are some selective shorts that you can go into right now, but you've got to be a little bit careful because, especially with a Friday and today's 100 point moves, you've got to be thinking, sorry, it was Thursday. Thursday's 100-point move, and then Friday's give back of some of that, and then another bigger move today. You've got to consider that there's enough residual strength to make it very frustrating for bulls and bears. Just make it simple. Bulls and bears. VIX index. VIX in the 20s, more bearish. VIX in the 19s to the 17s, much more bullish. All right, and bullish in the context of this still being a bounce from a sell signal that went to a sell mode in the daily. The weekly and the monthlies are all in at least sell signals, if not sell modes. Now let's do something very interesting. If I'm looking at all these different chart patterns, you have to say, what's the relationship of the QQQ series to what's going on? 106.31 was the recent high. Today's high is 106. Let me just double check. Yeah. 106.33, so it's gone to a leg C. And the moment I see a leg C in a daily chart, I'm looking at it and I'm saying, okay, what is the context? Because usually you're going to make an arch formation at an A or a B. If it manages to get to a C, that almost always implies, especially with the stochastic at 92% and the MACD is very strong, that there's a V-shaped pattern forming, but there isn't a V-shape forming. All it's doing is going sideways with a little bit of a pop to a new high bar, and the monthly and the weeklies, no, the weekly and the dailies are suggesting this is a bounce. The monthly, I have to really wait the entire month of September because it's at resistance now in the 106s. At 9-period moving average resistance in the monthly chart, it's 9-period moving average resistance in the weekly chart, and it's holding the 9-period, the black lines, and these are all the black lines there, moving averages. It's holding it as support for 1, 2, 3, 4, 5, 6, for 6 sessions, 6 consecutive sessions, it's treated the 9-period moving average. It's walking the 9 EMA. That's what we talk about. So I have to say, wait a minute. Let me go alphabetically. AMZN, Amazon, made a peak C. So this is a little bit like the Qs themselves. They're in leg C right now. But Amazon's already made a leg C. And it's pulling back probably a peak C today. Can I go to a D? With 120-minute charts is A, B, C, D, E. Unless it's restarted, C1, C2. I'm going to do that. So this is an A, B, C. Oh, it's the same thing. All right. So this is a D. Amazon suggested 524.51. There is enough energy just to squeak. If the market holds gains, doesn't give them back by the end of the day, then 532.45, that's 8 points. Actually, that's a lot of points. Let me put it this way. At this stage, it's more at 90% in the stochastic, and the MACD is still good. There's more upside potential than downside, even if we're only talking 12 points, 8 to 12 points up. And maybe at this particular point in the day, it's up 3.49. You could give back 2 of the 3 points. So far, the weight of evidence says a little bit more to the upside. If you look at ABC, Adobe, let's look at Adobe. Adobe, same thing, went to peak F back in, that was August the 18th. Yep, August the 18th. Round number open 87. 87.25 was the high. Plunges down to the 71.33 level. Oh, that's quite a big move, right? 15 points. That's almost 20%. Now it's got some of it back. A, B. It's made a peak B. It keeps taking a number of days before we can try to tackle each left side high bar. I'm looking at this and I'm thinking that Adobe is holding okay, but it better not break 77. It's at 79.47 ADBE. And the best case scenario is that it rallies, and by tomorrow afternoon, Wednesday afternoon, instead of just being stuck here in the 79, 70, 80 area, it is in fact moving to 80.35 and preferably trying to tackle the high of that bar of the 9th. All right, let's look at Priceline, PCLN. Also got the same kind of pattern. It's almost like I never even moved the chart. A, B, leg C. Actually, this has got a little bit more strength, and it has a peak C. That's the only way I could count the weekly chart. Maybe Priceline has enough strength to go to a D from 1302 at this point, up 16. Tries to tackle the 139 round number high. 1395, I'm sorry, 1395 round number high of the 7th of August. Huh, that's going to be very interesting. Okay, so at this particular point, Priceline is looking quite good. Let's look at Facebook, because another very important NASDAQ stock, NASDAQ type stock, high tech. A, B, is at a peak, 92.06.08. No, this is a leg C. Got a lot of C's going on here. So, Basil, have you looked at FIT? No, I haven't looked at FIT. In fact, I thought FIT was over Cordova. I thought it was done for, but I'll have a look. So Facebook is acting very well. And the weekly chart has just gone from an absolutely, from the 98, was that 98 or 99? 99.24 high of the 24, round about the 24th of August. It goes plummeting down. That was July, I'm sorry. In August, it plummets down to 72 round number low. Oh, I forgot to write that in. 72, I remember seeing it and then forgetting to write it. Round number low. Oh, there were so many round number lows that's another reason why perhaps we're going to have a little bit more upside than one would expect. So Facebook's acting very well here. And nice action today, a little doji candle Friday. Now it's above the doji. Let me just look at FIT because that doesn't fit the scenario that we're looking for, but it was a question in the den. FIT. Yeah, to me it's done. In fact, we were talking over the weekend. Some people had a FIT watch, and I said, you know, I bet people use it less and less and less and less. It's just a fad as far as I can see it. Anyway, we'll see. No, I don't have anything for FIT. Let's go to, I want to look at Google. Google. Is it Google L? What's Google like? Why am I forgetting which Google it is? Yeah, Google L. So Goog, let me just go to Goog itself because that's the one that I usually notate the most in greatest detail. So this is ABC. In the daily, 674.90 was the high back in August. It has a peak C. Should it go to a D? Maybe this is a move that actually takes some of these stocks that have got incomplete weeklies to the highs. I don't know. All I'm saying is that so far, Google looks like it's got tremendous support. It's a 634 up 11. It looks like it's got some tremendous support at the 621 9-period moving average to the 619. But if it breaks 619, that's different. It's gonna that would be a sign of 617. Let's say it breaks 617. That's a big sign of weakness. 17 points lower. Meantime, it's trying to sidle up to the high area of 640s. That's where there's a lot of resistance. All right, so Google's acting quite well. Google. Let me see. Oh, I want you to do just in terms of the Dow stocks. I want to just look at Cisco. Cisco is acting okay. I want to look at Intel. Intel's acting quite nicely. A, B, it's made a C, peak C, and it looks like you try to tackle that and make a D at the 30 area. It's at 29.66. So there you are. So the reason why the semiconductor index right now is very important at 5101 is because within the context of what we're looking at here, I think that we're very close in the semiconductor to have the SMHs, the market vector semiconductor ETF, to have some kind of a test of strength. And that test of strength is going to be very important because 51.75 was the high at peak D on the 9th of September. If the semiconductor index, the SMHs, can start to trade at 52.30s, that 52.98 200-period moving average in the daily, which it hasn't been to since it broke down back in, what was it, May or June? Yeah, back in June, right there. June the 25th, 57.99. That is going to be something, a real test, because every time it's got close, it's pulled back. But this time, the MACD is strong and the stochastics at 80.83. My inclination is to think that the big test is being made, and we'll see if it's successful in the 120-minute chart as the slow-moving average, the 200-period moving average there has been crossed by the 9-period exponential moving average there, and that says, you know what? We could drift towards the high that was made just recently of 51.75, and that would take us towards that 50. What did I say it was? The breakout would be in the 52.20s. You'd start to see the 52.98 200-period moving average become a magnet. So this is a very important stage because it's saying certainly rallying before the Fed comes out with any statement says, hey. We're kind of happy with what we're seeing right now, and we want to rally into Thursday. What's good about that is also raises the base for people who want to be long because it means that you know exactly where you're going to be breaking down to. So now the one other thing I want to do as we're about to go to the break is I want to look at IYT. That's right, the Transportation Index. Okay, leg D, that's what we're looking for, leg D in the IYT. Oh, this is going to be very interesting. I'll be back. Dow's up 163.
Until recently, it was almost impossible for the average investor to hedge against currency risk in Europe or Japan. For a bold trade on Europe or Japan that protects against moves in currency, trade HEGE or HEGJ, 2 times currency hedged leveraged ETFs from Direction Investments. Visit directioninvestments.com today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction shares. To obtain a prospectus or summary prospectus, please contact Direction shares at 866-476-7523. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors. Distributor Foreside Fund Services, LLC.
Hi,
I'm Steve Rhodes, host of the Trader's Edge, heard daily at TFNN.com and author of Mastering Probability, a daily investment and trading newsletter service that I send out each morning by 8 a.m. My morning newsletter service covers exactly what the markets have been doing since last night's close, providing you with an edge on your trading day ahead. You get actionable trading ideas, including the exact entry, stop, and profit targets. Plus, I'll teach you the patterns and hidden market correlations that will make you a better trader. As a subscriber, you'll gain access to my 90-minute money management workshop, where I'll teach you the secrets that'll save your assets. The bottom line, I've got your back, including a 30-day money-back guarantee. See for yourself the type of analysis I provide each trading day by signing up for Mastering Probability today. With nothing to lose, this is an offer you should not pass on. Mastering Probability can be found under Trading Newsletters on the front page of TFNN.com.
In quiet markets, investors search for new trading opportunities. We'd like to introduce you to a new product that provides opportunities even in flat markets. Nadex, the North American Derivatives Exchange, is a new and innovative Chicago-based exchange registered with the Commodity Futures Trading Commission, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their trading platform. Nadex never charges a fee to use their platform, which even includes real-time charts and full customization capability. Nadex's unique short-term binary options allow traders and investors to capitalize on strategies even when the underlying markets are quiet. Nadex's innovation has allowed them to come up with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com, or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors.
TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, The Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartley's, ABC's, butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com.
This segment is brought to you by TFNN. Test drive all the newsletters for free at TFNN.com.
Hi, folks. So we're looking at the most recent IYT, iShares Transportation Average ETF. Having hit that 200-period moving average at a peak E in the Chapman Wave. But remember, the Chapman Wave, what we look for is from the lowest, most identifiable low bar. Here we're using the bar of the 8th of July at 142.72, starting a move up, and that starts to coincide with the stochastic and MACD moving up, and it goes to peak A, B, C, 3 peaks higher, pulls back quite sharply, holds quite nicely, and then goes to a leg D, and then a final E, the 5th wave up, hits the 200-period moving average, that coral-colored 200-period moving average daily right there, and it comes back, trough A, trough B, on the way you call them troughs, lowercase, trough C, and then it has a very sharp rally that goes again to an A, B, C in today's leg D. So this should be close to a pullback, but the stochastic's at 92%. That is really good. When it goes there, that's a good sign. When it flattens out, that's what you want. The great sign is when it flattens out. When it starts to pull back sharply, so we'll know by tomorrow or Thursday, the latest, whether or not the stochastic's holding up here or whether it's back under 80% because the IYT is pulling back. At this particular point, just because it's at leg A in the weekly above the 9-period moving average and leg D in the daily doesn't mean to say that we're going to have a preconception that D says you're going to fail. D say that if you can hold there with good technicals, you can go sideways to up. And that's very important. Why? Because if the IYT manages to hold well enough that by Friday or Monday it's trading in the 147.50 area, all of a sudden, the magnet of that 200-period moving average right there, the coral color thing at 150.36, becomes a magnet. It attracts it and also becomes a repellent. Because as soon as it gets there, it's going to say, okay, I've done my job. Now you can start to pull back. So, okay. So the IYT monthly chart is not that great. It really is very poor. And the weekly chart bounced right off the 200-period exponential moving average. MACD is trying to turn up. Stochastics turned up very nicely. Got good price movement from 128 to the recent high in the 151 area. What is that, 150? Oh, that was that high over there. Now, this one is 146 area, about where we are right now, and we're going to be watching this one closely. And there you are. This is what I was talking about in the IYT in the 200-period moving average. Look, that coral-colored line was a repellent, right? Every time we got there, and all of a sudden, it took all this time to get back, and now we're back there. We're going to see how it acts and reacts to the market conditions. All right, so I wanted to go through that. Now, let me do a couple of things. We've got, let me just see here. So you've got this pullback, the sideways consolidation. Usually this kind of sideways consolidation says you need one quick pullback well below these support levels, and then you can restart to have another rally, but that's also the most critical period of analysis. All right, we've had the morning turnaround to the upside, and let's see if it can hold into the afternoon. Going to be very important. So let me just go back here because we're going to go to Kevin Hinks in a moment for the Think or Swim Options Hour. A wonderful show. If you're ever interested in learning about options, all those different techniques, great show to listen to, and the advice that it comes from years of experience and great detail and strategies that normally people would not be thinking of, and in this case he outlays it in a very clear way. So here we go. We've got the IYT. Now I want to go to the VIX index. Just want to clarify what I said before, just to as a recap. The VIX is down 1.41. It hasn't made a leg D to the downside. My suspicion is if 2151, the low of the 9th, is taken out, it's going to be taken out quite forcefully, and 2123 is a 9-period exponential moving average. If all of this week into Friday's close says that the VIX is not broken into the 19 to 17 area, but is holding the 20s, it's saying, watch out, folks. Fund managers are taking this opportunity to be buying insurance because they think there could be another sell-off coming. That's what you've got to look at it. If it's holding here, we'll see what happens. I'll be back later on with Tom O'Brien. Thanks.
Tom O'Brien's weekly gold letter, The Gold Report, gives complete and concise coverage of the entire gold market. Inside, you'll get Tom's commentary on gold, the dollar, the rand, the bond, the XAU, the HUI, and detailed coverage of nearly 25 mining stocks. He'll give you the entry price, price target, and stop price of each stock trade. The Gold Report is a long-term newsletter where the focus is on building real wealth through the management of a successful portfolio of gold stocks. With a lifetime of knowledge and almost 12 years of writing his informative weekly newsletter, The Gold Report, Tom O'Brien can provide you with the important market information to help you make better trades in the gold market. Don't let the next bull run in gold pass you by. To get a month-long free trial to The Gold Report, an $85 value, visit the front page of TFNN.com today.
This is TFNN,